Hello, 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 and welcome back to the Foreclosure Deals live Q&A session. This is the broadcast where we discuss everything related to finding, figuring, funding, fixing, and flipping a foreclosure deal with a guaranteed profit of $25,000. I love having every guest I have on the show is super excited to me. I know I say that every single week. I'm so excited about this guest. This week's guest is the funding manager of Traction Capital, my hard money brokerage that helps my clients to get deals done in the real estate market. You've heard it before, but it begets saying again, the key to making money in the real estate industry is almost always using OPM or other people's money. So it's critical to have a solid hard money lending partner on your team to help you to fund the deals. Even if you have your own money to do deals, you got cash laying around, it still makes sense to have a hard money partner on your team. So when the right deals come along, you can leverage the capital that you have to do one or multiple deals at the same time. Today's guest, Mike Bancroft, funding manager at Traction Capital, is going to dive very deeply into how you can get a loan to do your first foreclosure flip deal. Without further ado, let's get Mr. Mike Bancroft on the stage. Mike, how's it going, buddy?
Good. Good morning, Donny. How are you?
I'm doing well, sir. Good to see you. Thanks for being on the show today. So let's hop right in. A lot going on with hard money. You've been on the team for a couple of years now, helping clients to get their hard money loan deals done. But let's go way back in time to when we first met and how we got started funding deals together at the level we're going back. Do you remember when we met a few years back? How'd that go?
It was a lot of fun when we met. We were at a convention, and so we had a really good time when we first met. And then following up from that, we stayed in contact. And then a couple of years ago, I started working with your financing for your deals for your company.
Yeah, and that was a big transition because before that, I was also handling the funding by myself, which, as you well know, is a full-time job in and of itself. And I know not a lot of people would describe me as highly organized. So it was important to have somebody on the team to help out. But in those years we were working together doing over 40 deals per year, right? You were helping to fund like over 40 deals a year during that time, right?
Yes, sir. Kept keeping me busy just with your stuff for the most part.
Indeed. And it was a great time. So fast forward a couple of years since then, obviously my company's not doing as many foreclosure flips as we were in the past, but now we've supplemented that business by bringing in people who want to do their first foreclosure deal or subsequent foreclosure deals. So walk me through the process. Somebody joins the coaching program. You're generally the first stop that they need to meet with to get set up for the funding. What are you looking for? What does that conversation sound like when you're first meeting a new coaching client? And how do you get them set up to get their first deal funded?
Well, one of the first things we check on is to make sure they do have their LLC in place, because we do commercial lending through an LLC. It's not a personal loan like in a conventional loan when you're buying a house. This is a commercial loan. It's a business loan for your business. So we make sure the LLC is set up. We make sure they have some funds for down payment one way or another. Some people take equity out of their homes with a HELOC. Some people just have the money, they just have that money. They've been successful in their businesses and they have the cash for the closings. Yeah. And then some of the people, we help them get credit cards and have a special way to actually use credit cards for down payment money also, which we don't recommend, but we can do it.
Yeah, and it's one of those things where whatever it takes, get a deal funded, And I think a lot of people get caught up, it's hard enough to find a deal in this very competitive market. Then you got to do the quick deal analysis that goes into defining whether or not it's a great deal. But when it gets to you, when the rubber really meets the road, and there's a lot of moving parts to brokering a hard money loan. Obviously, you mentioned getting the LLC set up, getting the funding in place. At an average price of $300,000, the acquisition price here in the Colorado Springs market, what does somebody need in down payment funds right now to get a deal done in this market today?
Well, on a $300,000 house at 15% down would be about $45,000 down, plus some closing costs of around $8,000 or so. And usually we're at around a $250,000 house. So we usually get people in for less than 50. But if we do find one that's 300, yes, it would be a little over 50.
Yeah, and that's where we're targeting, so we're getting a lot of people, and that's one of the things I explained to people during the coaching assessment call. You got to have about $50,000 liquid to do a deal. But as you pointed out, there are ways to pull that money off of credit cards, lines of credit, home equity loans on their property. So you do help them find options for the down payment as well, right?
Oh, absolutely. If there's a way to get it done, we're going to find it. It's just, not everybody qualifies regardless, but if there's any possible way to get them into a deal finance wise, we do our best to find one way or another, get them into the deal with helping them find the down payment money for sure.
Absolutely. And a lot of people are capital short when they first sign up for coaching. One of the requirements is that we know that you have some degree of access to capital. We certainly don't want to bring anybody into the coaching program and have them make that investment, right? Unless we know where they're getting the capital. But, unlike conventional lending, this is not as credit driven, right? Talk to me about FICO score requirements and some of the credit requirements needed to get a hard money loan. Do I need a really high credit score? Obviously that helps, but what's the credit score requirements for you right now?
It depends on the hard money lender. We work with several. We have some really good relationships with some hard money lenders that say maybe only require, say, like a 650 credit score. I have one lender that really doesn't have a credit score requirement. It's solely based on the property, but then the property has to make sense, which they wouldn't be buying the property with us unless it did make sense. So
absolutely,
I have several lenders that I work with. I kind of match the deal with the lender depending on which lender makes the most sense for that particular borrower and the deal that they're buying.
And obviously that's common in the conventional lending space, and you're a conventional lender as well. You deal with normal type loans, but that matching process is super critical. There's so many different scenarios that are going on in the borrower, especially a first-time home buyer, first-time borrower in the investment space, not a first-time home buyer. But if you're buying your first foreclosure deal, like you said, the LLC's got to be pretty solid. Credit score's got to be okay, but not fabulous. And then you're just kind of structuring the deal with the lender to make sure it's the right fit for that particular buyer, right?
Absolutely. And like I said, every deal is a little bit different. If it's a rural area, there's some lenders that won't lend in rural areas, but I have lenders that will. And so, if there's a deal, we'll find a way to finance it as long as they have some down payment money.
I love that. One of the things that we call it hard money lending, Mike, and you seem like a pretty nice guy, but it definitely conjures this image up, this loan shark type guy, like if I don't get my money, I'm going to find you type deal. That's the scary part of hard money. But what's the real world? What are we looking at interest rates right now in today's market? What can the buyer expect to pay for their interest rate today?
Well, on what we call the hard money loans in the business, say for a first timer going into their first deal, not with us, the interest rate's going to be around 13%. The origination fee just from the lender without my broker fee is going to be about 3 points on the origination fee. So for a first timer, it's pretty expensive. What we do is we help your clients by using your experience and get 11 to 12% interest rate, and including our brokerage fee, 2 points of origination. So we get them a better deal by working with us than they can get anywhere else.
And I love that. A lot of people are getting in the game. They don't know enough about the industry as is, but now they're getting zoomed with these really high hard money fees, higher interest rates, really scary terms. What I love about what we do is we take hard money and make it a little bit softer. Right? It's a little bit easier, more palatable, more likely for people to be profitable in a deal. But some people are concerned about, if the deal goes wrong and I've got this 11 to 12% interest rate, what's going to happen then? What's the general worst case scenario for somebody? We don't want that to happen, obviously, but if things go really wrong, what's going to happen to the property if the property doesn't sell? What's your exit strategy in that situation?
Well, if the property's just not selling because the market is weak or something like that, then we can just roll them into a long-term financing on that property. They can have their mortgage paid with the rents. And so they're still, salvaging the deal that way if for some reason it's not moving on the market.
Absolutely. So a lot of people are afraid of the boogeyman of what if it doesn't sell. But the reality is some people come into coaching wanting to keep the property, right? They're looking to get that longer term financing. Well, what's the loan program that's commonly used right now for people who are going to rent the property out? And how do the terms vary from a hard money flip loan?
On the long-term rental loans, they're called in the commercial lending business, they're called DSCR loans. Is our term for it, which stands for debt service coverage ratio. So basically, the loan is based on the rent covering the mortgage or the loan itself. So say you're renting a place for $2,300, hopefully you're going to have taxes and insurance and principal and interest will be less, $2,000 or less. You're going to make a few hundred a month on the rental property. And those long-term rental loans, we have a variety of them, but the real basic one is a 30-year fixed. And they're around between 7.75% and 8.25% right now, depending on and those depend a little bit on your credit score.
Yeah, a little bit more credit dependent. That's amazing though. When you look at where normal conventional rates are in the high 6s to early 7s, when you talk about an investment loan being 7 to 8, that's actually not that bad for a DSCR loan now, right?
No, it's actually on, depending on the borrower and the situation, sometimes we're actually beating the conventional pricing. Because even now with the higher, a lot of people don't realize, but the old fashioned conventional has changed some with these high rates.
Absolutely.
Because the, what we call the par rate, like, hey, the interest rate 7% on a conventional loan in the past, okay, it's 7%. Well, now to get a 7% interest rate on a conventional loan, you have to actually put up points or origination fee type money to get that 7%. So in some cases, our commercial loans actually beat the conventionals now.
That's incredible. That's absolutely incredible. To think that investors can actually get a better deal than a conventional buyer in this market, but it really goes to show the basis behind that is because we're buying good deals, right? It's not so much about the fact that the borrower is qualifying as commercial, as normal conventional loans want. Commercial is really looking at the essence of how good the deal is, right?
Right, and it's based on the property value, of course, and the rents coming in. It doesn't have, it has very little to do with it. Well, it has nothing to do with the borrower's income and credit score. Well, it does credit score, but their income and their situation is not really minimal consideration compared to the actual just what the rents are. If the rents are covering the payments, that's what matters for a commercial loan.
Absolutely. I love that. Hey, we got quite a few viewers watching right now, guys. Hop in the comment box if you've got a question for Mike Bancroft about hard money loans and how to get started getting your first deal funded. When you first sign up for the coaching program, like I said, the steps are you join our Slack channel. Mike's part of the Slack channel. He sets up a time with you and his processor to get the information that they need to get the loan started. And then we are off to the races looking for the first deal. How do people get ready, Mike? One of the things we're really struggling with right now is deals are happening super fast. The market heats up. How do people get ready to do a deal? How do you set them up for success to make sure the money's on standby, they have everything they need, be fully prepared to pull the trigger when the right deal comes along?
Well, just like you said, we're going to, make sure they have the money readily available for the down payment. And the other thing we do is with these deals that are really truly deals, you've got to buy them the day you find them, or somebody else is going to be, finding them right behind you and making their offer on them. So what we do is we have your client will go ahead and set up their LLC, get their LLC bank account, get all their documents in place, get their banking in place. And then we have them put a $5,000 deposit in their LLC bank account so that when we find a deal and we need to wire the earnest money, they can just go ahead and wire the earnest money right away from their account that's already set up for their LLC with enough money to send earnest money immediately. Sometimes the earnest money is only $2,000, but to be safe, we put $5,000 because sometimes it is $5,000,
And the point is that we get our clients prepared, right? So they whatever comes along, we're not hunting for money or having to move money in the time. Because like you said, the really great deals just don't last very long. And there's something to be said for offering hard money financing because it's faster to close, right? Whereas a conventional loan, I should expect probably 30 to 45 days. How quickly can you generally get a hard money loan closed so the client can get started working on the property? What's the closing time frame?
Well, conventional now is around 30 days or less because there's so few conventional loans with the high interest rates.
That makes sense.
But in the meantime, for the hard money loans, it depends on the situation and the hard money lender we actually use. And that's another thing about pairing the borrower and the deal with the lender is, I have some hard money lenders that we can close within a few days, literally, as long as all the documents are there and the title's good. We can actually close in a few days. And then, of course, if we have a few weeks, then we can, get just slightly better financing just because we have the time to have an appraiser come in and things like that and get a little bit better interest rate and things like that. But in general, a few days we can close if everything is in place.
That's absolutely incredible, to think that you can move that kind of money so fast, but that's the essence of a really good hard money lender. And like you said, the conventional mortgage market slowing down. I heard a statistic that 40% of mortgage originators did not renew their license this year. Okay. So your industry got cut almost in half inside of a 12-month period, which means there are less brokers to do out there, and there's only the really talented guys who can move money in that capacity are going to be left standing, right? So that's a huge advantage for you. But how long have you been doing this? How long have you been in the mortgage lending game?
Well, I was doing mortgages back in the early 2000s when the 2008 debacle happened. So
okay,
a big part of my life has been doing mortgages. But in the meantime, if I wasn't doing commercial loans and fix and flip loans and was relying solely on the conventional, it might have been 40% plus one that didn't make it to the renewing their license this year.
Sure, because it's balancing it out with this side of the industry. What do you like more? You like the conventional side, a little slower pace, or you like this hard money, everything's moving fast thing? What do you prefer?
Oh, I love the commercial hard money. It's quick and it's so much easier underwriting.
Sure.
Satisfying underwriting in the conventional loan. I don't do the underwriting, but on a conventional loan, you've got all that underwriting. Anybody that's ever bought a house, they know how it is. You send them all your paperwork, and then they still want more paperwork, and then the week before closing, they still want some more paperwork when you're doing a conventional loan.
Right.
And I'm fine with it. I'm good with it, but it's just not nearly as much fun as just doing a hard money loan really quickly with just a few basic documents that are primarily related to the property, not the borrower.
Absolutely. And it's just a different process. Conventional, because it's a longer process, it's such a financial enema. I think, there's a lot of people don't want to talk to conventional lenders, being frank with you. Every time I have to have a conversation with you on the conventional side, I love you to death, but it's kind of annoying. I'm not going to lie to you. I think on the hard money side, it's common sense underwriting, as you pointed out. It's based on the deal, not as much me as the borrower. And that's what I tell my clients when they're coming into the process. It's like, it's really going to come down to how well Mike pitches the deal to the lender, not how well Mike has to pitch you to the lender. And as you pointed out, we only pitch great deals to the lender. So it's very easy for even brand new clients who have never done this before to get into a hard money loan and start flipping their first deal, right? Is there some stuff a client can do, prior to signing up for coaching, even where they could get themselves ready to go and start getting the funding process set up? Should they meet with you before and just kind of get things going? Do you recommend that?
The thing is that if they want to do things on their own, the very first thing, because we do primarily Colorado Springs, Colorado, the very first thing to do would be to go to the Colorado State website and for $50 set up an LLC.
Yep.
And that would get you ahead of the game if you're just, want to do something now before you actually sign up. But if you don't have one in place before you sign up, I have a step-by-step walk you through, what screen's going to pop up next when you put your information in on the Colorado State website for your LLC documents. $50, you're protected from liability.
Well, and you're fundable. I mean, beyond the protection, it's a limited liability corporation. But you got to have it to be fundable, right? And that's the big separating factor between doing a conventional loan and doing a hard money loan is you must lend, as you pointed out, into a corporate entity. You cannot lend to an individual, right? Well, why is that? Why don't hard money lenders lend to individuals?
Because of the federal regulations involved with licensing and, conventional loans, complicated, licensing required. Commercial loans, simple, fast, not licensing required.
And more expensive, right? And I think that's a important part of it is like the commercial loans do cost more money. There's definitely a higher interest rate involved. But in the fast-paced world of real estate investing, because you're only going to own the property for 90 to 120 days, ideally, the interest rate is not as important to you, right? So we're looking to move that money relatively fast. Commercial lenders want to see that money churning relatively quickly. And all of it makes for a system that makes your job to get that money in the market and back out of the market, then back in the market as fast as feasibly possible. So I think it's a great synergistic relationship. Mike, we're nearing the end of time here. What other recommendations would you tell people who are looking to get started in their real estate investing journey, right? They really want to do this thing. They're dying to buy a foreclosure flip. They've been thinking about it for years, as so many people have. What would you tell them to do to get started in their real estate investment?
Well, really the best thing to do is to get with Donny, get signed up with his coaching. He's one of the very few gurus that actually has students that do deals and buy deals and actually make money in real estate. I've been to all the different weekends of pitches from different gurus and all these things. Some of them charge as much as 40 grand, and almost every single person in their program never buys a property. They just get all hyped up that weekend. They pilfer their credit cards and just take all their money, and they never do a deal. Like thousands of people are that way. And if you really want to do a real estate deal and you're serious and you're willing to take the plunge, this is the safest, best way to feel comfortable doing it and to actually have a team in place that can help you do it instead of just giving you a bunch of training and teaching that doesn't do anything for you. You've got to be able to find the deals. And that's the hardest part, is finding the deals. You know, the funding part to me is easy just because I do it all the time. But the finding the deals for a new person is really, really difficult. And so I think by joining your team, getting the deals found for them and then packaged, I mean, it's a very unique system. Very few coaching people do what you do for their students.
I appreciate that, Mike, and I'll send you the $5 later. But I mean, to your point, there's a lot of coaching programs out there, a lot of mentorship, a lot of training, a lot of stuff you can get on YouTube to learn about real estate investing. But the key is having the wonderful team I formed with you as a critical element of it, to help people to find deals, to analyze those deals quickly, to fund those deals with your group of lenders that helps the clients to get the right financing for the deal, to fix the deal with our project management team, which is a bunch of rock stars, and to flip the deal at a substantial discount from retail, all leading to a net profit of people actually doing deals instead of talking about it, as so many of these other coaching programs offer out there. So I'm super honored to have you on the team as well. I appreciate all that you do for the clients. They absolutely adore you. You know, it's just a matter of building that relationship with my team that I formed so people can actually make money doing real estate investment right here in the Colorado Springs market and the other markets we're going after. Are you able to lend anywhere, or are you kind of limited by state like most conventional lenders, or where all do you operate?
I can do fix and flip loans, commercial loans in general, even on multi-unit apartments, whatever. Commercial loans in all 48 states. I do not do Alaska and Hawaii, but all 48.
Nobody wants to get Alaska anyway. It's cold. Hawaii, though, we got to work on that, because at some point,
I know eventually we want to retire. We eventually want to retire there. It's just their flips are $1 million. Just
you got to start pretty high to do a Hawaii flip. But one day,
$1 million. So that's not really the place to start if you're a new person.
No, I would agree. Yeah, you want to start with a nice moderate price range. Well, you know, Mike, thank you so much for being on the show. We're going to wrap up with that. Thanks for coming on. We'll talk to you in a bit, guys. Here's the thing: the market is shifting. It's changing. It's a dynamic place. But by bringing on a team of people who can help you to find, figure, fund, fix, and flip a deal, like Mike Bancroft at Traction Capital, you're going to be in a position where you're not thinking about real estate investing. You're not hoping you're going to do a deal one day, but rather you're going to be put with a team, with Mike included, that's going to help you with every step of the process to find the deal, analyze the deal, fund the deal, fix the deal, and sell it. You know, so if you're watching this right now and you're not sure yet if you want to do real estate investing, that I'm probably not the right fit. But if you get this, if you understand the process that we're helping people to get through while they maintain their day job income, I would be honored to talk to you about getting started in real estate investing through my Foreclosure Deals coaching program. Slide up in my DMs, ship me a message, however you want to get in touch. I really appreciate you guys tuning in each and every single week to the Foreclosure Deals Coach podcast, where we talk about finding deals. And I want to remind you now and always, don't buy a house, buy a deal.